Welcome to another episode of Equity Mates here at AusBiz. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I'm very good, Bryce. Very excited for this Tuesday episode of Equity Mates on AusBiz. We're in the middle of reporting season, as we say at the start of every episode, but it's an exciting time because there's so much information coming out, a fire hose of information.
Yeah.
We can learn a lot about companies we're interested in, learn a lot about companies we're not interested in.
Yes.
And it's hard to keep up sometimes. So luckily here on AusBiz, we have experts who know far more than us and can help us make sense of it all.
Absolutely, Ren. And we've got an expert in today to help us get a sense of how investors are thinking about reporting season differently. It is our absolute pleasure to welcome Gemma Dale from nabtrade. Gemma, welcome.
Thanks, guys. It's lovely to see you.
So for those of you who haven't come across Gemma before, she is Director, SMSF and Investor Behaviour at nabtrade and has the inside scoop on how all the investors at nabtrade have been approaching reporting season. So we're going to be having a look at what's hot and what's not at nabtrade. So let's start at the top, Gemma. We've seen a lot of news come out over the last couple of weeks, obviously, about reporting season. There's plenty going on. What have been some of your overall takeaways so far?
Probably the most interesting thing is that coming into reporting season, our investors have been hoarding cash, absolutely hoarding it. So we saw last year extraordinary buying, huge numbers of new investors coming to the market, and they were buying the dip. So we've always heard about retail investors that they are very flighty, right? That they buy at the top, they sell at the bottom, they make very poor decisions. And we'd always had the hypothesis that was not accurate. And last year proved once and for all, frankly, that retail investors can be terribly astute and they love buying the dip and they really want to buy bargains and they really want to get good quality shares at a discount and they will hold them. But clearly what's happened over the last 6 months as the market's returned to its highs, it's looking quite toppy for some of our investors, quite clearly. And so they've stopped trading. They went to the sidelines. They've been hoarding cash. And we're showing a lot of signs of nervousness, frankly, coming into reporting season. There was just this clear sign that they didn't see anything that they found appealing to buy. There was a bit of trimming when things would spike and this sort of real reluctance to put more money on the table. So reporting season has been the first opportunity in a while for a lot of our investors to take a look at stocks they've been interested in, see what's been happening. And also they're very news driven. They're not particularly excited by the results themselves. What they're interested in is price action. So things that spike or fall quite dramatically. They love the things that fall if it's something that they're keen on. And also to see any news that can drive some price action in the future they might be interested in. The other thing they love, which is a little bit different to perhaps your audience, but we've got a big group of retiree investors who are very keen for dividends. So anything that is a special, a buyback with a big, fully franked component, that kind of stuff, they're very attracted to that. So coming into reporting season, really reluctant. And then suddenly all of this news is hitting, as you say, we've got the fire hose of excitement coming. And all of that news is bringing investors back to the table. So it's been amazing how quickly our volumes have spiked again. Investors picking through the news every day to find the stuff that they're interested in and going after the shares they think are a great opportunity and getting rid of the ones that they think have done more than well enough and they'll take some money off the table.
Well, Gemma, if your investors over at nabtrade are looking for dividends, there's been some big companies that have announced specials and increases, especially the resource companies come to mind. But I guess more generally about reporting season, have any companies stood out as particularly relevant or particularly interesting to you?
The most interesting, and this is very personal, the thing that I have found most interesting, partly because it's not something that comes up frequently in my conversations with retail investors. I spend a lot of time talking to professionals and to institutional investors, and they're very concerned about the impact of climate change on their portfolios. They may not have a strong personal view, but they're very concerned about activism and regulatory change and so on affecting what they hold. So for BHP to spin off its oil resources to Woodside, I find a really interesting development. It speaks to what professional investors have been thinking and concerned about and going, clearly a lot of companies are having to make active decisions about this. and they're having to be forward thinking because they don't want to be hanging on to stranded assets. They don't want to be holding things that get punished in the future for being too emissions hungry, for example. What's fascinating to me is that most retail investors just don't seem to have an interest in this topic. A lot of people I speak to just don't see it as an issue. And I will be fascinated to see how many of them pay more attention to this when we see our biggest companies, particularly our biggest resources companies, starting to make active steps. So that move from BHP I find really interesting, and I'll be really interested to see how retail investors start responding to it.
Yeah, it's a pretty interesting one that I think is starting to gather a lot of momentum at Equity Mates within the community, that's for sure. So Gemma, we always love to know who's buying what. So are you able to shed some light on what have been some of the most traded stocks by NAB traders?
Yeah, sure. So it's really changed in reporting season, and that is interesting in itself. The first 6 months of this year, it was kind of Fortescue and Daylight was roughly our trading patterns. There were a lot of investors really interested in Fortescue. Obviously, we know the iron ore price has fallen off a cliff, still very high by historical levels, but fallen off a cliff. And suddenly other stuff is pushing Fortescue to the side. So it had to be fairly dramatic news to make that happen. The volumes in Fortescue are so high. Rio was huge, absolutely massive, and investors were so excited about that dividend. So we saw incredibly aggressive buying in Rio immediately after their results, and they were obviously earlier than everybody else. So much enthusiasm for them, and as soon as it went ex-dividend, everyone went to the sidelines again. So it was clearly the divvy they were after. And then BHP, because it got hit quite hard after its results, was down 6% on the day, down 6% the next day. It's a 94% buy. Clearly, so many of our investors just saw that as a great price to pick BHP up at, and it's in the book, right? There's a lot of investors who hold BHP, but clearly a lot of people who want to hold even more of it at this price. They were really keen to get on it.
Wow, so the big resources stocks obviously had a great year. The iron ore price hitting all-time highs. It seems like a lot of NAB trade investors taking the opportunity to buy some for the dividend. If we look at some of the maybe less loved stocks, what have been some of the most sold stocks during this reporting season?
Yeah, interestingly, they're not less loved. They're just clearly feeling a bit toppy for our investors, or they've done extremely well. Before reporting season, we had the news about Afterpay with the Square takeover, and our guys immediately started selling. So that was interesting in itself. I mean, the Afterpay price has been extraordinarily volatile, but it's also been an incredible winner for almost all of our shareholders. So the average buy price for Afterpay last year, and it was in our top 10, was $40, selling at 130. You've done really nicely. And anyone buying it before last year bought it for even less than that. So they've just done incredibly well out of Afterpay. Most people were really happy not to. Well, they don't want to partake. They don't want to be holding a depository receipt in the Square entity. So they've gone to the sidelines on that one with their cash. They're happy. They've been selling out of Afterpay. The other one that was really interesting was CSL. So CSL was a huge buy around the 250, 260 mark earlier this year. It was up around 350 not terribly long ago. When it fell back to its COVID lows, our guys saw that as a massive buying opportunity. It spiked again after its results. They've got a very, very long history of outperforming immediately after results and doing very well. Surprising to the upside, even when they tell you they're going to have a rough time. And our guys were trimming at over $300. That $300 mark is a real benchmark for them. They want to trim there. So we've seen heaps of selling in that, about 75% sell at the moment.
I'm glad you mentioned Afterpay there, Gemma. No doubt it's an incredibly hot stock in the Equity Mates community. Are you seeing any trends in the younger end of the market in terms of what they're looking at buying versus perhaps the retirees? I know Ren's obviously looking to retire soon, so going after the big dividends. Yeah, are you seeing much difference between what the younger guys are buying versus the retirees?
Yeah, there's very different behavior. Afterpay, what was most fascinating about Afterpay was it sat right across the book. It was a retiree specky. It was kind of amazing. So it It has been in the top 10 since the day it listed. I think it was a very tangible stock, it's a very tangible product. People understood it, they could see it, they could download it on their phone, they saw it in every store. So that was held right across the book. Our retirees are very predictable in that they love banks, even though they have been trimming recently. They love banks, they love Telstra, and they have come around to loving the big miners, because even though 20 years ago you wouldn't get a dividend out of them if you paid them, now they're the big dividend stocks, right? So they've really been loving that. Our younger investors, we have a cohort who really love trading the smaller mining stocks. There's always a story about lithium or rare earths or something for those guys to get interested in, and that will be where they trade quite actively. In terms of the next Afterpay, there's nothing that stands out at the moment. I wish I could tell you there was something really obvious. There's nothing super sexy that everyone's all over just yet, but I'll keep an eye out for you.
Well, Gemma, if you could tell us what the next Afterpay was, that would have been the title of this episode. It would have been pushed across socials. It would have been great for us. But look, we're right in the middle of reporting season, but there's plenty of companies still to report. If you look out on the schedule and you look at the companies still to report their numbers, are there any that you're going to be watching particularly closely, or that you think might be sharing some interesting news with the market?
So the ones that our guys will be most interested in, Fortescue's got to be top of the list, simply because it's just such an enormous holding. It's particularly interesting because last year it wasn't even in the top 10, and not in prior years either. So it hasn't been very popular until this year. It's clearly the pure iron ore play and people love it. They have loved it very much. But you were going to ride that wave to a point and then need to get off, because the iron ore price was elevated for very specific reasons that everyone was largely aware of. So it'll be interesting to see how many people decide to get off that wave when the results come out, or whether they're going to wait a little bit longer, see if they can eke a little bit more out of it, and whether some people want to have it as a core holding. That'll be quite interesting. We've got Wesfarmers and Woolworths. They're also very core holdings. Again, you talk about the difference between the younger investors and older investors. They sort of sit in that Gen X and above kind of category of people like their supermarkets and Bunnings and those sorts of things. And although you've got Mount Hotham as well, you've got some lithium exposure there too, if you want it, from Wesfarmers. So there's a fairly large group of people who are going to be very interested in those. The one that is interesting is A2 Milk. So A2 Milk has kind of come back in the last few months. They had 4 downgrades in a little over 6 months. They were looking pretty dicey when that Daigou trade clearly just fell off a cliff. And yet some of our investors clearly felt that it had fallen as far as it's going to go. So a lot of people would be very interested to hear the outlook for that, and whether or not there's any hope of it coming back to its highs, and maybe they could hang on to that one.
Yeah, again, A2 Milk, a hot stock in the Equity Mates community, so very much looking forward to seeing how that all pans out as well. But Gemma, that is all we have time for this afternoon. Very much appreciate your time. It's always very interesting to see how others are trading and thinking about the markets, and particularly at a time like reporting season. So thank you very much, and it's been a pleasure having you on Equity Mates.
Thanks, guys. Great to be here.
And that brings us to the end of another episode at Equity Mates. Plenty to think about, as always, with reporting season, a lot going on. We know there's some big companies still yet to report, so we'll be probably bringing you the results of those next week.
Probably.
So
look, it's a great time to be in the content game. There's always something to talk about.
Yeah. But look, if you'd like more of what we're doing, head to equitymates.com. Otherwise, we're going to be on all your podcast apps, or you can hit us up with an email at contact@equitymates.com. But Ren, tomorrow, Watch This Wednesday.
Watch This Wednesday. We're going to be speaking to Ian Carmichael of Fairlight Asset Management to hear about 3 stocks on his watch list. So join us, same time, same place tomorrow.
See you then.